Auction clearance rates have fallen to levels last seen during the 2022 housing downturn. This is according to new data that's coming out from Domain. The slowdown follows recent interest rate hikes, along with changes to negative gearing and capital gains tax, of course, that was announced in the federal budget earlier this month. Well, Domain's chief residential economist, her name is Nicola Powell, and she says that it is an indication that buyers have lost confidence.
Clearance rates are a really clear indication of what's happening in the market. It's almost a real-time pulse of how buyers are feeling and how sellers are actually adjusting their asking prices. And I think that immediate buyer feedback is very clear. We started to see a slowdown in clearance rates in April, and partly we were wondering whether this was just preempting what could come out of the budget, because there was obviously lots of leaks prior to the budget being delivered. But that slowdown in clearance rates has occurred over May as well. And we've got our big auction markets, so that is Sydney and Melbourne, really consistently seeing clearance rates in those low 50s. And that is a clear indication, I think, that buyers have lost confidence. And they are, they know that supply is rising. And I think that they're realising that market dynamics have shifted into their favour, and they're taking their time to make their decisions.
All right, so they're just playing the waiting game now. I do wonder, there's so many elements to this. How much is this data linked to the proposed changes in the tax reforms, coming from the federal budget? You mentioned there a little earlier. Or is it more to do with the a confluence of a rise in interest rates, rising fuel prices, the uncertainty over the Middle East war?
That's a really good point. I think it's an amalgamation of all of the different factors, because I think the key point is we were already seeing a slowdown in Australia's housing market prior to the budget being released and those proposed changes on CGT and negative gearing. So 3 rate hikes that we saw delivered this year. I think nobody anticipated we would get 3 back-to-back rate hikes, but that is exactly what 2026 brought. And we know that when interest rates rise, buyers do start to slow down. If you look at the average borrowing capacity, 3 rate hikes have reduced borrowing capacity for that average buyer by about $100,000. That is the same buyer, but that is a completely different purchasing outcome. And I think that was already slowing down the market. And I think overall, just confidence and economic uncertainty does weigh into property decisions. And ultimately, supply is rising now, and I think buyers are realising that choice is rising. And I also think there has been obviously a little bit of jitters coming through, obviously around those proposed changes to negative gearing and CGT.
All right, so look into your crystal ball for us. Are we likely to see fewer auctions and sellers perhaps preferring to go the way of private treaty or the open market?
So we do have a lot of auctions occurring today, particularly across Sydney and Melbourne. I think we've got about 1,200 auctions in Melbourne and just over 900 in Sydney. So auction volumes are still pretty healthy. I think what we tend to see when the market slows down is buyers react first, and that comes out in those weaker clearance rates. But eventually what you also see is sellers react, and they pause their decisions on whether to sell their home. So I do think that we are in a weaker auction environment at the moment, and that may mean that some sellers opt to sell their home by private treaty. But I think under changing market conditions, the core aspect to really realise is it's all about putting the right asking price on your home.